Alright, good afternoon, sir and all of my friends. So we're from Group 4. We are going to present about input tax and output tax. Our group members consist of me, Felicia, my friend Sari, and Ricardo. So the input tax that we are going to discuss consists of input tax crediting for GE, which calculates net income with none. The third one is input tax that cannot be credited, input tax excess, and the output tax is about delivery of taxable goods, delivery of taxable services, export of taxable goods and services, and output tax return. So the first one we're gonna talk about the input tax. So input tax is the tax that has been collected by the tax entrepreneur when purchasing taxable goods or services. So we just jump to the input tax crediting. So it means then that claim back any VAT paid on goods or services from a transaction. So input tax can be credited with output tax, but for expenses on the acquisition of taxable goods or taxable services that do not have a direct relationship with business activity, the input tax that doesn't can be credited. So what are the expenses that are directly related to the business activity? There are expenses for production, distribution, marketing, and management activities. So here we have the example about the input tax crediting. Here we have PT Garmindo, a garment company that has registered as a TE, purchase machines from PT Indo Machine, also TE, with 15 million. So how much is the PT Garmindo's input tax credit? So here we use the 11% for the red. So the input tax that has been credited by PT Garmindo is 11% times 50 million equal to 1,660,000. Next is about input tax crediting for GE, which calculating net income with none. So based on Direktorat Jenderal Pajak nomor SE 17 garing PJ garing 2015 about net income calculation now. So the individual entrepreneurs who choose to be subject to this norm using the net income calculation norms with the gross turnover in 1 year less than 4.8 billion. So this is according to Pasal 14 UU BPH. Next, so the notification of the use of the norms for calculation of net income submitted within 3 months from the beginning of the tax year concerned is considered approved unless based on the result of an audit it turns out that the taxpayer doesn't meet the requirements to use the norms for calculation of net income. So the list of percentage norm for calculating net income is grouped into 3. The first one is 10 provision capital, include Medan, Palembang, Jakarta, Bandung, Semarang, Surabaya, Denpasar, Manado, Makassar, and Pontianak. And the second one is other provincial capital, and last one is other areas. Next, based on Surat Edaran Direktur Jenderal Pajak nomor SE 13 garing PJ 54 garing 1995 about the guidelines for calculation of input tax credit for GE using net income calculation norm VAT series 1295. The input tax that can be credited in tax period. First, for the submission of the taxable goods is 70% times total output tax in the relevant period. Second, for the delivery of taxable services is 40% times total output tax during the relevant period. And the output of tax for TE is VAT payable gross turnover value times VAT rate. And the input tax that can be credited in a tax period is calculated. The definition of gross circulation value here does not include the VAT. Okay, next we are going to talk about input tax that cannot be credited. So input tax that cannot be credited against output tax. This means that the input tax met by a taxable entrepreneur cannot be used as a deduction for output tax. So here we have the VAT related to tax invoices that cannot be credited. The first one is VAT on the acquisition of the taxable goods or taxable services that was made before the entrepreneur concerned was determined as TE. And the second one is VAT on the acquisition of BKP or JKP or taxable goods or taxable services that is not directly related to BKP business activity, that is has no relationship with the BKP production, distribution, marketing, and management activity. The third one is acquisition and maintenance of the vehicles in the form of sedan, station wagons, unless their merchandise are to be listed out. And the fourth is VAT on the acquisition of BKP or JKP obtained from outside the custom area before the entrepreneur concerned is designated as TE. And the fifth is VAT on the acquisition of BKP or JKP obtained from outside the custom area before the entrepreneur concerned is designated as TE. The sixth is VAT on the acquisition of BKP or JKP does not meet the provisions of law. And the seventh is VAT for the use of intangible taxable goods or for the use of taxable services from outside the custom area where the tax invoice does not meet the provisions. Concerning the VAT and LGST, Article 13, Paragraph 6. And the eighth is VAT on the acquisition of BKP or JKP, which input tax is billed using the issuance of tax assessments. Ninth is VAT on the acquisition of BKP or JKP, where the input tax is not reported in the SPT, which was found during an inspection by the Directorate General Pajak. And the 10th is VAT for the acquisition of taxable goods or taxable services used as capital goods or services before the TE carry out production activities. And the last one is input tax invoice that have exceeded the credit tolerance limits, which is 3 months, more than 3 months. And the last one is input tax that has been charged as cost. So this all is the VAT related to the tax invoice that cannot be credited in the input tax. So I think that's all from me. The next material will be explained by Ricardo. Thank you.
Okay, thank you, Felicia. For the next material is about input tax excess. So if the credit input tax are greater than the output tax, the difference is the excess tax that available to compensate in the next tax period. However, if the input tax excess occur at the end of the fiscal year tax period, the tax excess of the input can be applied for the return or restitution. We jump to the second submaterial about output tax. Output tax is value-added tax payable that must be collected by the taxable entrepreneur who deliver the taxable goods, delivery of taxable services, export of taxable goods or tangible tax, export of taxable goods intangible tax, and or export of taxable services. Delivery of taxable goods. Delivery of taxable goods is any activity related to the delivery of taxable goods. And the taxable goods in here means the goods subject to the tax based on the law. Goods are the tangible goods, which according to their nature or the law can be in the form of movable property or immovable property and intangible property. And the buyer is the private person or entity receive or should have accept the delivery taxable goods and those who paid it. Here's the thing included and excluded in the meaning of delivery of the goods taxable. In the section of included, there are some points. The first one is delivery of right over taxable goods because an agreement, transfer of taxable goods due to a rental agreement for business or leasing, delivery of taxable goods to traders immediately or through an auctioneer, on use and or free gift of taxable goods in the form of the inventory and or asset then not for trade, delivery of taxable goods from the center to branch or branch to center, delivery of taxable goods by consignment, and delivery of taxable goods in the framework of financing agreement conducted based on the Sharia principle. And here the section of excluded in the meaning of delivery of goods taxable. The first one is delivery of taxable goods to the broker as refers to in the commercial code. Delivery of taxable goods for guaranteed debt, delivery of taxable goods in the term of taxable entrepreneur create centralization place of tax payable, transfer of taxable goods in the framework merger, consolidation, expansion, splitting, and business takeover by the taxable entrepreneur. And the last one is taxable goods was not to be traded. It is remaining at the time of the company dissolution, and the input tax on the acquisition is not can be credited. For the last material for me is about delivery of taxable services. Delivery of taxable services is any activity provision of taxable services. The taxable services is any services that are subject to the tax based on the law, and the service is any service activity based on the agreement or delegation that costs an item, facility, convenience, or the right available for use, and the service recipient are the individual or entity that accept or should have accept the delivery of service taxable and pay it. Okay, I think that's all the material for me. For the rest material will be explained by Sari. Thank you.
Hi, my name is Sarah Madani and I'm going to explain about exports of taxable goods and services. Export tax is a type of value-added tax or VAT that imposed on export activities of services and taxable goods. Every export activity will be taxed, but the export rates for taxable goods and export of taxable services are different. And the calculation of export tax still includes the imposition of export VAT, but exporters do not need to pay it because the rate is 0%. The next is exports of taxable goods. The VAT rate on export of taxable goods is 0% of the basis for imposition of tax. This is regulated in Law No. 7 2021 concerning harmonization of tax regulations as an amendment to several previous tax regulations, one of which is about value-added tax by changing and reducing several articles by not replacing Law No. 42 2009. Taxable goods are divided into two. The first one, tangible taxable goods and intangible taxable goods. There are 6 types of intangible taxable goods. The first one, copyright in the field of literature, scientific works, and art. Copyright of any conformity relating to the design, formula, trademark, and intellectual property rights. Commercial, scientific, and industrial equipment. Additional and complementary assistance in connection with the use of rights in the commercial, scientific, and industrial fields, the right to use moving image and video tapes for television broadcasts and vocal tapes for radio broadcasts, and partial or full release of rights related to the grant of intellectual property rights. So, all transaction of these intangible taxable goods must generate a tax invoice. So taxable entrepreneur must make a tax invoice when developing the intangible taxable goods, even though the buyer is not a taxable entrepreneur. category. Okay, we jump to export of taxable services. Export of taxable services is any taxable services delivery activity produced within a customs area to be utilized by taxable services export recipients outside the customs area. Customs area is the territory of the Republic of Indonesia, which includes land, waters, and airspace above it, as well as certain places in the exclusive economic zone and continental shelf in which the customs law applies. VAT rate on export of taxable goods and services. A value-added tax rate of 0% is applied to export of tangible taxable goods, export of intangible taxable goods, and export of taxable services. There are 10 types of exports. An example of VAT-exempt taxable services. The first one, Maclon services, repair and maintenance services, freight forwarding services related to goods for export purposes, construction consulting services, technology and information services, and so on. The last material is about output tax return. Output tax return is a document that must be included when there is a return of goods or cancellation of taxable services from the buyer to the seller. That's all from us. Thank you for watching and don't ask any question. Goodbye.